Thank you. Can I just check with you, with regards to the store expansion, you didn't actually talk about the capex requirements with regards to the store expansion, that's one, and I didn't see any gross margin determinants in your arguments. Can you go through that? Thank you.
Okay. The capex for the store expansion is about 3.5 million baht per store, which if it a franchisee store, the franchisee has to pay us the loyalty fee about 2 to 3 million baht, which will reduce the capex if it the franchisee store.
And so also in terms of gross profit, as you can see on the screen, CPO charges 46% of the gross profit. And in total, the initial investment for CPO is only $88,000.
Hi. I would like to understand a little bit more on the franchisee side, because I mean, if a franchisee cannot have a very sustainable profit, then the whole company cannot be sustained. So can you share with us what kind of work you have done on the franchisee side, what kind of profit margin, and what's the return if they actually circle their competitors?
Okay. The CPR does not only charge high profit sharing. In return, they actually offered a lot of value. For the first and most important thing, they offer brand equity of 7-Eleven. In Thailand, the brand equity of 7-Eleven, when compared to other local convenience stores, is significantly higher. Also, CPR provides technical support and knowledge support, training each franchisee to become entrepreneurs.
And we talked to the franchisee, and it turns out to be the payback period for the franchisee is turned out to be only 3 years.
If the franchisee model is so successful, why is this the only store which is utilizing this model? And okay, so that's the first question. Should I repeat the question? Yeah. Yes. If you mentioned that this is the only store which is using the franchisee model, the franchise model. Now, why the others are not replicating that model if it is so successful?
Because most of the big competitors with high financial resources, such as Tesco Lotus or Mini Big C, which is owned by the Casino Group, most of their stores, they have established hypermarket stores, and they don't have expertise in franchising out their operation, because by nature, they are big in the size of the stores.
And a related question to this is, now, if they're using the franchisee model, and how do they ensure the quality of the product which is being sold out to the consumer? What kind of quality controls do they have for the franchises?
For the franchise.
They have a rigorous study and feasibility like feng shui and number of traffic counting before start the franchisee, before becoming the franchisees.
And it has a very extensive supply chain network and IT system, which allows the company to actually send the goods to the franchisees. So the franchisees don't have to take care of their own supply chain at all. 7-Eleven in CPO takes care of that.
And also during the past, the closure rate of the franchisee on the average of the industry is about 5%, but for CPO it's only 0.5%, which is lower than the industry average.
If you were advising the CFO of a very cash-generative company like CPO in terms of what to do with all the cash, what would you tell them to do? Would it be to, 1, pay more dividends and buy back shares, 2, add a distribution center, or 3, refurbish stores?
Okay, we believe that the company should retain this cash in the company, not 3 of that choices, because the company has the plan to expand its business internationally to China and neighboring countries. So keeping this cash in the company.
Excuse me, but of those 3, what would you tell them to use? What would you tell them to use of those 3?
okay, we will tell them to repurchase the stock, since this our value will transfer to the shareholders of the company, and the company doesn't need much refurbish in terms of to keep the higher same-store sales.
Because recently the company has already engaged in refurbishing the new stores. If you have heard of the Great Flood in Thailand before, they actually refurbished the store so that the store become water resistant already. So, and it's something ongoing anyway. They do refurbish the store every certain terms, every certain years anyway. So repurchasing the stock would be the best idea.
And in terms of distribution centers, they already have plans to open new distribution centers, ongoing plans to do so. And also, since in order to open a distribution center, CPO has to make sure that there's actually demand for new products, for more products, before opening and having a supply of distribution centers.
Moreover, for the paying a higher dividend, currently CPO has a very high payout ratio already. It's more than 80%. So we think that it's better to repurchase the stock rather than increase the dividend payout.
Yes. In terms of your advice to the principals to buy back its own shares, as you had mentioned in your closing remarks that the share price is already at 65, which is above your target price. So how would you relate that to your target price of?
Because, let me address this question this way. Because since the time that we did the valuation, the end of last year, and up until now, there has been a fundamental change that was not incorporated into the valuation at the time. That fundamental change is the government's policy of reducing the corporate tax rate down from 30 to 23%. At that time, it was unclear, but at the moment, the government has, the policy has already been in effect. And so this is one fundamental change. But we also did the scenario analysis on this, and if we incorporate the tax benefit into our valuation, the price could have gone up to 67 baht per share. In addition to that, as you noticed, there has been the Asia-Pacific stock market region itself has been on a rising trend. Stock Exchange of Thailand itself is also rising very rapidly at the moment because of the increased liquidity, more fund flow from European countries. And so that's part of the result that we believe that the price will even go up even further.
And in addition, CPO has just announced a stock dividend. And also this will make CPO stocks be trading at a very good level for Thai people. Around 20 to 40 baht is the optimal range for trading. And so the stock dividend will make this have more liquidity, this stock have more liquidity and further boost the price as well.
I've got a question. With your scenario of everything looking so rosy, do you not think that the PAC ratio could be worth 1.5 times PAC or 2 times PAC? How would you justify it, like you put it at 1.1 times PAC to get to your value of the stock? I mean, what goes in your mind?
What
I want to say is, do you think there's no competition for this company?
No competition, and there are actually no significant local competitors that could actually become the peer of this company at the moment. Because if you take a look at local brands, in this case, well, not local brand, but if you take a look at Family Mart, for example, in Thailand is a very small business compared to CPO in terms of sales revenue, in terms of number of stores. And local players are also very small.
And if you compare CPO to other regional competitors in the convenience store market, CPO is in a very desirable position right now. It's in the growth stage, but it's quite stable as well. And so compared to other regional competitors, CPO is superior in terms of choice.
Since the company is a part of a big conglomerate company, I believe the major shareholders can be easily put the profit in a different